Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. Well, here we are. I think we are officially at the end of the summer. It is, oh, geez, silly calendar. I got to reboot my computer. Friday, September 4th, 2020. We made it. How ironic, our breadth indicator actually is getting happier right now as the major indexes are all falling out of bed. And for whatever it's worth, actually, I've often seen this in the past. I tried to explain it to the community in the Daily Brief this morning. Usually what happens, of course, is the market is all super excited up in here. And then the broader market slowly starts to break down. And then actually when we get down into this phase, there are names that start to perk up. But interestingly, what I've often found in my career is that the major indexes actually break last. And actually, that's the phase that I think we're going through right now. So I do find it interesting that some of our little screener ideas actually are up on the day, even though the major stock indexes being completely comprised of just, a half dozen of these big cap stocks that influence everything. It's just because these clowns are all down on the day that you see these horrific numbers. But ironically enough, actually the broader market is actually getting a lot happier. So go figure. Can't be said, the same can't be said, of course, for crypto, but I suppose we'll get to that in a moment. But the point I wanted to just simply make was we're coming into the end of the summer. I get the distinct impression that what you saw through July, August was nothing more than there weren't many professionals in the market actually operating. It was barstool people. The professionals in the business got the barstool people to load up on the long side. Stocks only go up, that kind of nonsense. And now they're basically taking that fluff back. Be interesting to hear whether Mr. Barstool actually continues along his stock market journey. Everything goes up. Well, actually it doesn't. But anyway, he's got to learn that lesson the hard way. The way I'm looking at, again, remember, end of the summer, really, I would actually argue, don't believe anything that you're seeing here. Especially through this week. This is just, hey, we got the kids on the run. Let's really fuck with their brains. I think, to all intents and purposes, there was a lot of cleanup that needed to be done. These stock indexes probably just went too far too fast. We passed Feigenbaum levels. You saw what happened when we passed Feigenbaum levels on things like the gold. They had to clean that up. So not a big surprise you see on the big stock indexes. They hit, actually did we hit? I guess we hit this Feigenbaum off of the original bottom. And ironically enough, gee whiz, look where we're sitting right now. We are sitting 34.10 is that Feigenbaum level. Let's just, where the hell are we now? We're at 33.92. So my hunch is actually this market will probably rally 20 points here before the end of the day. But anyway, that's here nor there. For your guys' purposes, I like to go through a relatively sort of strict regimen. So let's just go through it market by market. I always like to start off the conversation with the good old US dollar index. I don't think it should surprise anybody. We got up into these wicks from a week or two ago, and we're starting to see some selling into this. Keep in mind, when you see a wick like this, what it means is price went up. And then somebody came out and sold, sell, and drove it back down. On this one, the price in this case was all over the map, but it did go back up in there, and whoever was selling, sell more. Back down you go. So really shouldn't surprise us. We get up into that area, and gee whiz, the sellers come back out. V bottom, dead cat bounce. I mean, literally, this is straight up. I get the distinct impression that, usually most of these markets like to turn off of fractals. So I wouldn't be surprised if we look something along those lines. You can see what I drew yesterday. The message really hasn't changed. There's nothing new here. And what I would caution everybody is we don't even have the pros back in the market. We're going to find out on Tuesday what this market really thinks. We might see the US dollar just collapse on Tuesday. I doubt it, but we might. My hunch is this battle, this debate, will probably rage all through the U.S. election. Then once we're on the other side of that political event, a lot of these sociological kind of events, the Jupiter-Saturn cross event. We have one gentleman on the site who's like super into astrology, and he sees a whole bunch of funny business going on here. And I think I've told you guys, people. In fact, actually, I posted on a public lounge the other day, and people were just blown away when they heard me say this. And I just sort of take it for granted that people know this, but it turns out most of humanity has no clue about any of this stuff. But, you know, the year 2020, 2021, and really, I think it's mostly 2020, there's like 6 different celestial events that are happening all in this year that the last time all 6 of these things happened in exactly the same year was like 1,000,000 years ago. This doesn't happen every day. So seeing how absolutely insane and nutso the markets is, remember, all humans are. We're part of this universe. So should we be acting a little bit nutso, confused, uncertain through this? Absolutely. And this is exactly what uncertainty looks like. Barstool guys make fun of industry veterans who have proved their worth over decades, but the public, and you know, this particular Barstool guy, he happens to be my vote for the public, he has the audacity to come out and say things like, this guy doesn't know what he's talking about. It's just like, oh Jesus. Anyway, you know, as it stands going forward, like I said, it's awfully nice to finally see the break here in the major indexes. Ironically enough, as a technician, you should look at this and go, well, actually, it doesn't really surprise me what's happening here. Just think of it this way. Remember what I told you about wicks and tails there a moment ago? When we're climbing day after day after day, just going straight up like this, where are the tails that tell you that previous buyers actually bought and stopped the down? And you can see really in earnest, it's not really until we have this big red bar, but more importantly, you see this bar A where it was down, they opened it up down, and then the buyers came back and drove price back up. So that tail right there is hugely significant. And gee whiz, look where the market stopped this morning. What a surprise. So, ironically enough, price action-wise, there's nothing really out of the ordinary here. The question ultimately, the $64,000 question is, do we do something along these lines and then consolidate and charge our way higher? We could. We're not going to do any old damn thing at once. Or do we actually M out and that's the end of the bull? Tough to say. You never know. What I would just simply say, of course, is if you did buy way down here last spring, I sure hope you're paying yourself a little bit for your ideas. And then when you look at a chart like this, do we really want to get too excited on the bull side? Maybe just slow down, cool your jets, let things settle down. Kind of like what I showed you in the gold market recently. Traders like to trade consolidations. When you see price going like one direction there, what you have to do as a trader is simply say, well, I have to wait for some sort of consolidation, give me a range, and then either head back up to the long side or break down, head down to the downside. You want to see a really great, like what I think happened here was this was a totally manufactured like futures trade. Because if you look at the futures chart, this was just stunningly cliche. The problem, of course, here is you got to have your plan. You got to have everything all ready to go. And then when the signals come in, you just act. So, you know, like one of our school modules, we build scripts and algorithms to get the computer to trade for you automatically. That's up to you whether you do that or not. You know, there's a million different ways to skin the cat. Here's 2 different approaches to trading that both use the 50% rule as a profit objective, which is a very natural, very normal level for markets to retrace to. Ironically enough, when you actually look at the profile here, it's interesting when we change the perspective. If I look at the entire profile here, ironically enough, actually, looks like we've accepted back into value. So odds are actually we should actually have to come back down to the low of value here. But that's not the point. I'm getting derailed, sorry. The point I'm trying to make here is you identify a trading range. And this was the double bottom W breakouts from that consolidation. Then you're going to draw your fib one level to the other. And I tell you, this is just a rule of the universe. Markets like to retrace 50% of their previous moves. It's one of the very first lessons I ever learned as a technical analyst like 30 years ago. And I tell you, it keeps you honest. It's just such a handy little tool. This is a great example of different traders' approaches using the same 50% rule as a target. One trader is going to use the 4-hour market structure, and hopefully everybody watching this, you've learned this by now. M's are usually bearish, right? What do we say if the market is smiling at you? It's pretty straightforward. I put out tweets about Bitcoin here recently to that effect. I don't know whether they were received very well. Another approach is to do things like hunt for top ends of trading ranges. Let's see if I can get the chart here. There we go. Obviously, this is the top end of range. Then hunt for reload zones. And what a fantastic example. I mean, this is ridiculous. This was so cliche. What a beautiful empire. You probably heard me talk about empire patterns. Boom, boom, boom. Sell signal on the fail of the empire, which just so happens to be Mountain Man. And these guys, they just made out like fucking bandits. The irony of it all is Mr. Mountain Man, slick levels trader, he booked an 11.75 risk-reward ratio on that trade. Now, you tell me, how many times do you have to be right, let's say out of 20 trades, for you to, just break even? You only need to be right like twice out of 20 trades to break even if every single setup is 11.75 risk reward. Now, obviously, that's not very realistic. But it just goes to show the whole point of trading is when you're right, you got to get paid. That's the whole point of this. I thought it was interesting, probably more conservative. A much simpler trade was the algo went uber bearish. So any kind of market structure signal with the algo uber bearish, well, I mean, it was okay. It produced a 2.19 risk reward ratio. I mean, both strategies are perfectly valid. Obviously, this guy up here, sharpshooting, he's not going to be right that often. But you tell me, at 11.75 risk reward, if he's right only half of the time, just a coin toss. Well, this time I'll right. Next time I was wrong. Time after that I was wrong. Time after that I was right. This guy at 50% win rate, he's killing it. And he's driving Lambos. Anyway. Sad part about it, of course, probably public's coming in and panic dumping into this event, and you can see the size of this tail. Obviously, as we are heading down into 50% rules, the bottom of value, just looking at this range, obviously buyers came in and bought here, and this is what I'm kind of worried about. I'm worried, I don't know. I mean, hell, I like markets just like everybody else. I get the feeling that they're actually cleaning the market up ahead of the adults coming back after Labor Day weekend. If this didn't happen before Labor Day weekend, then I would be like, oh man, the pros are going to come back and hit this thing just right between the eyes. But because this is all cleaned up now, I actually think really simple concepts like good old reload zones. Ironically enough, you could actually make the argument that we're starting to get into buying levels. Who steps in on the buy side right at 61.8? And ironically enough, all this is just a tag of the original market structure breakout. Isn't that incredible? So, caveat emptor, trade your plan, trade your setups. I think that, ironically enough, I think the short trade's actually probably done here. But we'll see how it goes. Coming back to your conversation. Sorry I got so derailed there. As I said, coming back into previous lows, coming into support, I wouldn't even be surprised if we actually go and put in like a nice little polite W here. Keep in mind, today's Friday. There's probably a lot of options expiry stuff going on. You know, there's clearly not a trade here. If you are like Mr. Lower Time Frame Trader, I think you took profits on your shorts into this level. But if we can get some sort of nice polite consolidation and a breakout, then I think we could actually head up and break to new highs. That would be sort of this kind of conversation. So, one market actually I'm quite pleased about. I don't know how long lasting it is, but it's a really good sort of walkthrough demonstration. And Kevin actually told me, he said, you know what, just get rid of these. Go on crypto Twitter and you can say, hey, look, I called the top in the crude market. Which, of course, is, you know, the whole point of this video channel and the whole point of this is you have to learn that half of the shit that you see on crypto Twitter is nonsense. And like all the crypto kitties, they just got destroyed this past couple days. Here we are. We've got a bit of a top coming in here. Who knows if this trade idea is going to work. For your purposes, we've just kept drawing the profit objectives back to 50% rules. You never know. I mean, fuck, maybe this thing comes all the way down here. I don't know what's going to happen. But I did tell you guys that we were just going to sort of follow this along and see how difficult this top to find and then to actually trade will be. And as you can see, it hasn't been easy. So we'll continue to work this, but we might find they come back after the Labor Day weekend. This market's been knocked down back into previous lows. This thing bottoms out and it starts to work its way back higher. We'll keep this trade going for now, and what I'll just simply say is if this is indeed the top, and if we can start seeing lower highs and lower lows printed, then we'll start moving our stops as new market structure comes in. So we'll see how it goes. Right now, trade's doing pretty well. Really our job as traders right now that we're in a half decent trade, is just don't fuck around with this. Just let it do its thing. Anyway, kind of a fun conversation. Great example of a risk off vote there today. So, stock market's feeling four today. Woohoo! Never know how many are going to come out at once. Anyway, is 4 lucky? Sure hope so. Risk off. Does this start getting some traction to the downside? We'll see. My hunch is coming back from Labor Day, we'll probably see some sort of counter trend rally. Hey, these things are cheap. And same thing on the crude. And if we don't break this original top and we roll over and make new lows, then we've got more M's and we'll start moving our stops down on this paper trade. Bonds, been very rangy, of course, basically the entire summer. I was conjecturing that we would see a head and shoulders formation here, and I was looking for a counter trend rally to test these highs. You can see the bonds are coming off smartly here this morning, which is interesting, seeing stocks come off. If the bonds keep coming off here, at some point, this might actually help the stock market find some sort of footing. Not really a trade. You can see we came into reload zone, so that's probably why there was some buying down in there. I suppose now if we do come down, test these lows, candle bodies for trade location, you know how I like that, lower time frame traders, that kind of thing. And we can hold these lows, then we can start thinking about working our way back up in earnest. This would be a really sloppy head and shoulders, so I think with today's failure, I'm probably going to be tempering my enthusiasm for that. But you never know. Who knows what's going to happen in this market. But I would say just in the short term, if you are a bond aficionado, probably something along the lines of that. Yeah, so you can see they rallied up here. Great example. Do not take this trade at this trend line. This is a trap. And they rallied it up above and then just puked out. It happens all the time, folks. So, kind of like that crude oil. But here's the thing. If crude oil is really topped out and breaking down, these bonds should not be going down like this. I think they're going down because the employment reports came out today and they weren't as bad as people were expecting. And the unemployment rate's falling. And, the irony of it all is now the Fed's basically said they're not going to be raising rates here in the face. But, we start getting a whole bunch of inflationary economic data. The Fed might just come out and say, you know what, we can start normalizing rates again. And that might just kick the shit out of sort of risk assets. So we'll watch how the bonds are acting. If we start cascading lower here and taking out these lows, then I believe that's actually bullish of the stock market. And also, too, us thinking that maybe stocks are backing up into a buying range. Like I said, they've basically taken all of the fluff over the past basically, 3 months, right? Remember, the pros sell in May and walk away. So all of this June, they were probably gone. How ironic. The bonds are basically sitting right back at exactly those levels from early June. The pros might come back from their summer vacation and continue selling. Totally possible. And I put this study on here way back when, like back in the spring, and just simply said we're not going to really decide how this trade actually went until we either have this bullish ABCD up top hit or this bearish ABC to the downside hit. Interestingly enough, we might even 1 high, 2 highs, 3 highs. We might actually have a bearish bot setup actually coming in here. Maybe I'll do up those levels later on today. So, interesting to see. Risk, the US dollar index should be a risk off bet. So, got a shooting star here. Maybe that helps a little bit with the kind of risk on. Stocks going to try and find a bottom. Oil should find some sort of bottom. Bonds, risk off. They're seeing some selling here. I suppose our final piece to this puzzle is what the hell is going on with gold? Crazy gold. Chaos levels hit. Bullish objectives hit. Market goes gapping higher following that. You have to look at this as this is the public acting idiotic and stupid. And my hunch is if we probably pull up like a Willy indicator, which is my time-tested tool for studying overbought and oversoldness, my hunch is if we looked at the Willy, he's probably nice and stupid all through this. As I had said earlier, our number one job is, for God's sakes, don't chase, don't chase, don't chase, don't chase. The way that I would be looking at this right now is we wanted to see a consolidation. Great, we've got it. We want to see 3 higher lows. 1, 2, 3, maybe. And then a turn back up through this 1978 level. We can now start to think maybe we're going to get W's on the other side of this trend line. That's good. And if that does all play out, then I'm looking for gold up to about $2,200-$2,300, but it's just not there yet. Now, it'll be fascinating to see, risk on, risk off, right? We like to follow this on a fairly regular basis on the site. Where are we here? These are all looking very similar again. Japanese yen at a very interesting inflection point, especially coming into that Labor Day weekend. My hunch is gold, bonds, probably going to follow the direction of the yen, because remember, the currencies lead everything. So if you see the yen crap out here, my hunch is gold, bonds continue crap out. If you see yen consolidate and break out to the upside, W's, bots, all that kind of stuff, my hunch is the bond market, probably this is a head fake, and the gold market holds these lows, and we turn back up. It's a big if. Then we go and look at risk on, and this is what bothers me. Seeing the way the bonds and the stocks are coming off simultaneously, that's not a good sign. But we look at risk on, and you can see everybody's on their knees right now. And as I had said before, is a lot of this just cleaning up the fluff, the nonsense, the silliness, crypto kitties, bar stool guys of the summer market? I think so. And of course, it'll be really interesting to check in with a lot of sort of social media people. How are they doing right now? My hunch is they're probably not very happy. The people that I actually follow, and we might as well dovetail over to crypto. I mean, we all know, what are we supposed to think if we see the market smiling at us? I still believe, to be honest with you, that crypto is a nice leading indicator of risk assets here. The way the crypto kitties, that nonsense went on, that's all risk. That's all fluff. That's all nonsense. And sure enough, bang, they're getting hammered. So, I don't know. Does this portend that we're going to get this big honking double top in the stock market? And, you can already see the oil market's already got a little double top. That was the one that we shorted there the other day. This is not a very encouraging picture, I'll tell you that much. As a trader dude who looks at this, I wouldn't buy any of this shit. That's got disaster written all over it. But oh well, only time will tell. Ideally what we want to see is consolidations here, right? Actually, kind of what we're seeing in the gold and the yen to set up the next trade. So back to our sort of conversation a la crypto. And, stock market. It's fascinating, actually. Our breadth indicator is actually trying to start turning back up. And I do find it fascinating that, we bought this little Carnival Cruise Lines there on the breakout from that W there, and he's still working his way higher. I mean, that's that's the definition of a good trade. Market just continues to make higher highs and higher lows, so I got nothing to complain about. A lot of the stocks that we doubled, sold half on a double, because remember, I just like to get free stocks. A lot of those names, they're all collapsing. But I couldn't give a fuck about them. Those are free positions. I don't care. But new money coming into the market, be careful. I thought it was fascinating. TRISOF Club came up with this idea. Thank you, David O. Thank you, Kevin. Look at that son of a bitch just charging higher here today. What the hell's going on here? I thought this was a bear. I thought the stock market was collapsing. So don't get lulled into thinking that the stock market and crypto is actually broken and it's a new bear trend. I don't think that's the case. I think, like I said, and I've said this a few times, I sure hope people got this message or are getting this message that this simply looks like they are cleaning up the nonsense from the summer, getting the market ready for the pros to come back Tuesday morning. So speaking of, pullbacks into support, gee whiz, looks like Bitcoin did exactly the same thing here. Like I said, I think Bitcoin's a leading indicator. So what am I trying to do here? There we go. So, we were squawking about things like head and shoulders as is. I do find it fascinating that really all we're doing here is just coming right back down to the original bottom that was put in a month or so ago. This is crypto kitties. And the worst part about it is this is organized, responsible crypto kitties. This is nutso insano crypto kitties. Your asset is not supposed to double in price in less than a month. This is ridiculous. I mean, this is like altcoins. Banging out doubles. What happens after I bang out doubles? Price usually collapses. I mean, it's kind of shocking how cliche all this is. But the interesting thing here, again, I think they're cleaning up the excess. You notice that all they did was bring the market back down into tails. Like this big honking tail there. And we're sitting right on what I would consider a really important trend line for Ethereum. Because this I drew actually off of previous low, previous high. I love these pivot trend lines. They're so awesome. So it didn't really capture this rally very well, but I think it is really identifying the levels. Like, why did the market, have this huge gyration, then stop there, stop there, stop there, stop there? Clearly, this is an important line for the market. And gee whiz, lo and behold, look what we painted. Big fat doji. if this is sort of that topping kind of idea, what we're probably doing is some sort of big honking fractal, and it looks like that. So you can see I have AB equals CDs. If you do things like reload zones, what a surprise. You notice that the reload zone just so happens to line up with that level. So that's, if I was going to short, if I was going to call a top on Ethereum, kind of like what I showed you with that NASDAQ there a few minutes ago, it would be on some sort of fail right up in here. Or we get some sort of big M top, kind of like what I showed you on Bitcoin. What are you supposed to think if you see M's in the market smiling at you right here? You just have to respect that. I'm not saying Bitcoin's going to zero. I mean, the market will go wherever it wants to. But when you see that big M staring you in the face, do you really want to go and invest in this idea? I don't know. Caveat emptor. So, cool my jets kind of mode. Could I see this market rally back up? In fact, actually, this is exactly what I expect. Notice when we do reload zones, go in the other direction. The reload short zone is basically, you've heard Brian talk about candle body highs for trade location. And really what should happen here, if this actually is an M top, is they should give the institutional players the opportunity to actually sell that level. So my hunch is, and kind of like what I'd showed you with this crazy market symmetry kind of thinking, my hunch, believe it or not, is we're kind of in this kind of phase right here. So there's the M, bang, 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 confirmed M, but look what happens. Woohoo! All the way right back up top. This probably through the weekend. And then the adults come back to the work on Tuesday, and we actually get our real move here. So that's what I'm looking for. I'll tell you, we get that counter trend rally back up into that window. Don't be surprised if you hear Brian talking about buying puts. Doesn't necessarily mean that I'm right. You know me. I pride myself on trying to be right about 60 to 70% of the time in my trade ideas. So that means explicitly I expect to be emphatically wrong 30 to 40% of the time. That's a pretty big number. And then you sometimes get situations where you go on a hot streak and you get like 5-10 wins in a row. And as a professional trader, I go, oh shit, that means I'm going to have to probably book like 2 or 3 losses in a row because I live on that statistical model. So this is just my opinion. Shorting against M tops in reload zones works fairly well. You saw what that NASDAQ trade did. So that will be my plan going forward here. I suppose, here is 66% off of that entire range. Very close, very sort of, we could be botting here. But if that's the case, then what I really need to see, and you can see I already drew these levels out before, I'm actually going to need to see now 1 low, 2 lows, 3 lows, and then acceptance. And it's interesting, $11,000. I think that's probably going to act as some sort of psychological pivot now for the market, right around that. Does the market see only 10,000 and change? And if that's the case, then probably we're in this range. Can the market accept back above 11 and then we're back up in this range? So that's going to be my expectation going forward. Basically what you see on the screen here. As for altcoins, obviously the party's kind of over there. It's the end of the summer, so that's exactly what should happen this time of year. The poor people that play this shit perp, if you're new to trading, just understand this is an extremely dangerous product. Just a simple clothesline, 50% rules. There's the reload zone, but my hunch is just knee-jerk like I showed you with that NASDAQ. 50% level sitting at about 946 or so, which would be a Wyckoff check. Check the original high. Notice how we actually found some support off of this trend line. So my hunch is probably back and forth and all this through the holiday weekend. the Uniswap story is not over by a long shot, but I definitely think the kids just got their fingers burned. And, kind of like that same thing with Bitcoin and all that. If we rally back up against these trend lines and we start failing, come on, you. Right there, up in this area. If you did want to short this, okay, well, it's not a terrible idea. But it would be right up in sort of this area that I would be thinking short. Don't go and short it here. So, did a little bit of nibbling on some names that are not Uniswap related. Did get a fill on one name this morning that I've been trying to buy for a while. Where the hell is it? You can see I got my Geo here recently. This is the kind of stuff I'm buying. Decred. Oh boy, well, I guess that fractal bottom never came in. I'm long from here, so now I'm underwater. We'll see what happens. But remember, guys, I like to employ what we call the little old lady strategy with these altcoins. Nanny nibble strategy, where I'm not in a huge hurry to do anything and I put incredibly small amounts of money into these, and I'm just buying against the bottom end of ranges here. I mean, all of us would like to see this bottom hold, but the market will do any old damn thing it wants. And, if you put any kind of size into this, if you put this on a leverage on one of these, Uniswap things or whatever the hell they are, as you can tell, I really don't quite understand the story. I do understand that it artificially bid Ethereum prices up to the place where Vitalik himself is saying, what the fuck? So that's not a good sign. But point here is, if that still has to unwind, you can see, great example, don't chase this goddamn Ethereum, eh? Now we're back below all these lows again. But if this whole market has to unwind and fall apart, and you took any sizable trade risk on these things, you better get the fuck out and just preserve capital. You can see I'm still trying to get some auger. Didn't get filled there. Oh, I got my Dash. That's the one I got. I guess I got it yesterday. And Kevin told me he came in and he bought the 88.6 on Dash down here. Cheeky bastard. Way to go, dude. You are awesome. So, there are some names actually that I'm willing to step in on here, but I won't chase. Don't chase, don't chase, don't chase. And also, too, one worry that I have with regard to this whole Uniswap thing is there are new coins, like Hot Dog coin, I think, came out. I don't quite understand half of this shit. That people literally create these coins just like overnight, like instantly in a day, and then shill them. So this has got... I love crypto technology. I love the people that are involved. Just some really, really great people that have the best intentions. And then in this space, you have some outright assholes that are here to do nothing more than buy their Lambos. And they don't give a flying fuck about you or about the future of crypto. And I get the sneaky suspicion that this Uniswap thing actually might undermine crypto quite a bit, because I can guarantee you, if the Democrats take over the U.S. government this fall, we all remember that black lady who's the head of the Democrat-controlled House of Representatives on cryptocurrencies and how much she has a major hate on for these things. You start getting this Uniswap stuff, start actually seriously challenging the classic capitalist markets, and then you get these destructions of like $1 billion stolen right out of thin air. The regulators are going to just shit all over this. So I actually find it amusing that even Mr. Vitalik is like, what the hell are you doing to my baby? Well. Live and learn. Buy those W's. Don't chase. Don't take too much risk. PMA for the win. All right, everybody, that's going to be my last broadcast here before Sunday's Broiler Chicken Show. And on the Broiler Chicken Show on Sunday, of course, we have our raffle coming up for our upcoming school term for level 1. So by all means, and I mean, there's no obligation or anything associated with this. If you'd like to be in the raffle, fire your name and your email address in, and you can see in 2 days and 35 minutes, we will have our big raffle for the fall term seat. So be sure to check that out. And of course, if you want to learn a little bit about TRI, I think we've done a great job here putting together resources here that really clearly articulate what it is we do at TRI, how we help people, and sort of, what do you get if you actually decide to invest in TRI and your education. So I'll leave the video at that. Good luck, everybody. Understand it's the end of the summer. Should be a really interesting week coming out of Labor Day. And we might just find that the whole damn market finds some sort of bottom here through the weekend, and we start face ripping back up again as the adults come back and say, hey, shit, all this stuff's on sale. So have yourselves a great day. PMA for the win. All the best, and bye for now.